Good morning, traders, and welcome back to BCR's morning market analysis. As we wrap up this week, we've seen some big moves on the dollar. Gold smashed new record highs, and oil is still struggling to find a clear direction. So let's dive into the markets and see what's driving them. First up, let's have a look at DXY, the US dollar, which took a big hit on Wednesday, slipping down into the 99.5 region. This came despite a solid retail sales data, which was up 1.4% month on month in March to about $734 billion, beating expectations by 1.3% with an annual growth rate of 4.6%. But the focus wasn't on consumer strength. Instead, it was all about the renewed trade tensions. President Trump kicked off a fresh tariff investigation on key mineral imports, seen as retaliation against China's non-tariff moves and tighter export controls. That added another layer of uncertainty for the markets, pushing investors towards safe havens like gold and away from the dollar. Last week's sharp rise in US Treasury yields didn't help either. Right now, the dollar is being driven by more than just asset flows. It's also about rate differentials. And the sentiment is clear. Investors are looking outside the US for stability. Technically, the DXY is still looking vulnerable. The RSI is down around to 26, which shows that it's in oversold territory and could bounce. But with the MACD still signaling bearish and all major moving averages pointing downwards, the pressure remains. Resistance sits at 162 and 101. Key support levels that are 99 and then 98.52 and 98.35, which is a 76.4% Fibonacci retracement level. Next, let's have a look at WTI crude oil, which rebounded slightly on Wednesday, trading back above 61.60 as markets weighed up potential progress in US-China trade talks. China said it's open to dialogue, but wants more respectful terms and a clear negotiator from Washington. That hint of progress helped offset some of the bearish pressure from slowing demand and uncertain supply dynamics. The IEA's latest outlook doesn't help bulls much. They're expecting global oil demand to grow at its lowest pace in 5 years next year. While positive headlines from China or any unexpected geopolitical shocks might keep a floor under prices short term, the bigger picture still leans bearish unless we get something new to shift sentiment. Price action remains stuck in a tight range. A move above 63.64 could open path towards 64.20 and 65.44, while a break below $60 might see a retest of the $59 region and the 54.78 low from earlier. Next up, let's have a look at gold, which exploded to a new record high midweek, peaking at 3,343 during the early US session on Wednesday. Some traders took profits ahead of Powell's speech, but the broader sentiment stayed bullish. The combination of trade jitters, high equity valuations, and expectations for deeper rate cuts for 2025 is keeping gold firmly bid. Technically, gold looks strong. The RSI is pushing 75, suggesting momentum is still hot, and all major moving averages, short, medium, and long term, are sloping up and supporting the move. As long as prices stay above the 3250 and the 3280 range, bulls might look to challenge 3350, and from there, the big level of 3400 could be in sight. If the rally does run out of steam, we're watching 3280 for initial support, then 3230 and 3200. A break below that could bring 3150 back into play. The Australian dollar got a lift on Wednesday, pushing 63.91 during the US session. The move is backed by a weaker US dollar and strong Chinese GDP figures, up 5.4% year on year for Q1, topping forecasts and boosting risk sentiment. But as always, the rally feels fragile. The Australian dollar is still deeply linked to China's fortunes, and with Trump now looking into new tariffs on critical mineral imports, much of which come from China, the backdrop remains tense. The Australian dollar has held above 63 cents all week, now running a 6-day win streak. Technically, the pair is still supported. The RSI is sitting around 58, and price remains above both the 20-day, which is 62.43, and the 50-day moving average, which is 62.85. A break above 64 cents could open the way to 64.08 and 64.28 on the downside, 62.85 and then 62.43 with a deeper slide exposing 62 cents. That's all for today's morning market analysis. As we head into the weekend, stay cautious. Markets are still moving more on headlines and sentiment than clean fundamentals. Make sure your levels are tight, your stops are in place, and we'll catch you in the next one.